Hey, and let us get started. So, I wanted to this Saturday's event. I love these kind of events on Saturday because markets are closed. We can kind of kick back and talk to markets and not be distracted. But what I wanted to go through today, is kind of a process I use for selecting trades and good market setups as far as trade selections. And then I'm going to go through one really great strategy to use that's uh, really great for longer term trend trades. And now we're kind of kicking back into the trending market. So I wanted to cover that and kind of go over that in this session. So again, thank you for being here today. And let us get started. And I'd like to make this interactive as possible. So if you have any questions, fire them out there, and I'll make sure I try to cover everything today as well as I can. So one thing in today's really uncertain, fast-moving market, thing to think about is the edge really goes to those traders who can identify high-quality trade setups, before they become too obvious, before the herd sees it, right? And then you want to be able to structure and know how to structure the right strategy when the trend is in your favor. So that's what I'm going to, walk everybody through here today. So we're going to kind of go over how to identify high quality trade setups, so you can stop chasing trades, get positioned earlier, get ready for a trade, get into the trade before the whole population, the herd sees it. And then the other thing, how to read the environment. So this is, how to look at the other parts of the market, seasonality and charts and things like that to get your better timing, which is going to give you better trades. And then, kind of a smarter way to trade a trend, and that's using a strategy called the synthetic covered call. So we're going to, go over this, and it's a really great kind of process and strategy to use. And so that being said, let us get started. So a little background on myself. I started my trading journey back in the 80s on the oil side. So I was lucky enough to get my foot in the door at a company out of Houston at that time called Coastal Corporation, and they were a large integrated oil company that had refining and marketing and production pipelines, refiners. So the thing that was great is that when I was first hired, they sent me down to one of the refineries in Corpus, Texas, for about 3 months, and just kind of went down there, just learned the full process of oil, how it came into the refinery, the refining process, how the whole thing worked as far as distillation towers, putting it through, making gasoline, fuel oil. And then ended up in the shipping department, chartering tankers and scheduling crude, things like that. So just kind of learned the fundamentals of the business, and then finally got on the cargo trading side of crude oil and products, and started my career from there. So, spent a couple of years out in Singapore trading Asian products and crudes, and then ended up, back in the mid 80s, really one of the largest oil trading companies in the world was at that time. It was Transworld, Fibro, and Mark Rich. I was hired by this company, Transworld, and had just huge trading facilities. I mean, we were just in all the different markets, energy markets, foreign exchange, pretty much everything. So that was really where everything got exciting and really started, really going full force forward. And spent about 17 years at Transworld, and 16 of those in Bermuda. That was their corporate headquarters, and ended up running the international trading desk out of Bermuda for 10 years. So that's where I started trading options, and that's where got into all the different systems and stuff. We've developed a lot of different trading systems, and so it's just a really fascinating time and time spent there as far as the trading. So a lot of what I've learned over the years, I kind of attribute to that time that I spent at Transworld. So hopefully I'll be able to pass along some good stuff to everybody here today. So that being said, let's move forward. So the following workshop presentation today is purely for educational purposes. Any stocks, futures, or options mentioned does not constitute advice and should not be construed as a recommendation. So first off, let's take a kind of a market review and see where we are. I mean, we've had just a nutty kind of market the past, month or 2 months, basically. And just a lot of different uncertainties. headlines, everything's just hitting the market each and every day. So I thought we'd just kind of go over and see where we currently are and potentially where we're headed. So first thing, I always like to do is I like to look at rotation. Where's the money going? So this is just kind of a sector tracker, kind of a rotation thing that I use. And this just kind of shows year to date. I can break this down. Like I can look at every sector within the S&P. I can look at, the communication service sector, industrials, whatever, to see where the rotation or the money is flowing. So kind of year to date, we're, the big money's been, still pretty much in information technology and communications services. And then we can, what I like to do is break it down to the 1 day or 5 day to see, where the money currently is. And that's a lot, a lot of times that's kind of where I can find the trades that I'm looking at in the various trade setups that I'm looking to get into. So that's where I can kind of update my list, is through kind of the sector rotation kind of scanning process here. So that's one of the first steps that I take. The other thing that I always like to be aware of is I want to be aware of seasonality. So at all the different commodities and futures and just oil, you name it, there's always some type of seasonality trend, to whatever commodity or whatever you're looking to trade. It could be equities, bonds, gold, corn, soybeans. So I always like to get an idea of what is seasonality and kind of have that as part of the trade kind of structure. So if we're in an uptrend and we're trading equities or something, I'd like to have the seasonality behind the equities. So as much of an edge as you can get, this is one thing that can help. So currently I just kind of put the seasonality continuation chart together. And right now you can see where we are. We're currently right about here. So right here, this is like a seasonality continuation chart series. And this is the S&P 500, S&P 500 E-mini September continuation contract. So, this goes back, you can see the data is 5 years in red, 15 in black, and 29 years in that kind of magenta. And we're currently right about here, so the seasonal trend you can see is definitely seasonally to the equity side. As far as the S&P is to the upside. So, this is something that's positive. It gives us kind of that additional momentum to the upside, wind at the back of the trade. So, if you're trading the equities, the time to be, looking at the long side is right now with the current situation we're in, based on seasonality. So you can see the trend is seasonally up, and so that's a positive. Now, you get a lot of different volatility and a lot of cycles, rotations within the trend, but that's kind of basically, you can just kind of see what that cycle is. And so just looking back here at the 29 years cycle here seasonally, you can see it's been, quite a lot of cycle, up and down as far as reversals. Here it comes down, reverses back up, but stays kind of in this kind of channel, cycling to the upside. So that's currently a look there at the S&P. And then the other thing that we all like to follow is the NASDAQ 100. And so it's very similar. You can see the seasonality trend on the NASDAQ 100 is also seasonally to the upside. You can see that kind of nice sustained trend up there with a lot of seasonal swings in between, but the overall general trend is up seasonally. So we're currently, right about here, on the 18th, and kind of, it has kind of a really big seasonal high right about July. So, July 4th, that weekend, you can see kind of starts to stall out a little bit there. But that's a good look there at the seasonals as far as the NASDAQ 100. Now, the other thing to really be aware of is gasoline. So now we're coming into, we're into the springtime, we're into April, we're getting into May. And, gasoline is the big driver. And you can see the seasonal trend for gasoline currently. It's really pretty choppy, but the gas market has been just crazy to the upside since the Iran, crisis. It's really spiked up products and everything else. But the tendency typically is, that seasonally, we tend to maintain a pretty decent seasonal uptrend on RBOB gasoline. So we're currently right here, but you can see it goes a lot of kind of volatility back and forth, but that's the seasonal trend there. I was going to put crude oil in, but the markets have been, upset and turned over so much because of the Iran crisis that the seasonals really are not effective right now for the crude side. But this is kind of an overview look at, two of the main equity markets that we like to follow there. So that's a kind of a seasonal uptrend review on that. And then that's, something I always want to know where that seasonality is. So right now, we've got the wind at our back as far as the seasonals. Now, the next thing I always like to do, I do this once, twice, maybe three times a week. Just kind of want to know what I call top-down market review. So this is, back when I first started out in the oil side, we didn't have all the great technicals and the charts and everything. So it was pretty much everything was based on fundamentals. So we would basically, get the information from all the different offices that we had around the world, and we kind of, formulate a kind of a macro view, and then break it from the macro down to, shorter term kind of regional areas of the markets and things like that. But now, since we've got great technicals, great charts, what I like to do is do the same kind of process kind of from the top down and use it with our charts. So basically, I'll look at the S&P 500, the SPX, which is the CBOE 500 index. And what I like to do is start it out first with the macro time frame, which is to me the monthly time frame. So this is the really macro long-term view of the market. And then I like to look at the this kind of overview of the market using my different technical indicators that I've designed. And first is my momentum indicator. So I like to kind of follow momentum for forecasting potential future direction. So currently you can see here's the S&P 500. This is the monthly time frame. Okay, so every bar here is 1 month. But you can see that we've been in a fantastic, really good, strong macro trend to the upside. When it first started back here, this was 2022. You can see right here, these are the annual date lines right there. But you can see we had that pullback. That was in 2021. And then we had started turning sideways there in 2022. And then we finally broke to the upside back towards the end of 2023 right here. So you can see that the momentum then shifted back up. Now, one thing we're going to talk about here today is, these longer term trends and momentum shifts. And there's one indicator that I like to use, and this is what I call my cycle reversal momentum upside or downside cross. And so right here, you can see it was crossing right here, and you can see these arrows are pointing to the upside. So this is a momentum shift to the upside. And this is all based on a number of different indicators that I like to follow. First is the lower steady cycle 1 momentum, which is a really fast measurement. And then cycle 2 is a slower measurement to kind of confirm that. Now, then the arrow here, the orange, is a momentum reversal signal that I use. And so you can see here, this was a really good signal, very strong signal coming in right there. And that was, let me get the pointer up here on the date. That really hit right back there on April 2023. All right. So that everything pretty much lined up. And then it was just a beautiful trend up. So you can see here, this 21 exponential moving average. I like to use that kind of for trend tracking. So you can see it's just a steady, strong trend up, and really hugging the 8 exponential right here. So very, very strong all the way through. That was, through 20, let's see, right here, this is November 2022. That's 2024 right there. And then we had a little bit of a pullback here. We had that, that was the tariff situation back last April. And then that, big move back up. So you can see here then, not much of a pullback at all. I mean, the market seemed a lot crazier than when you look at the chart. So, the Gulf crisis, the Iranian crisis happened, right about here, right towards the end of February, early March. We had that kind of spike down, and it didn't even really get to the 21 exponential. So very, very strong. Just the market, it was just resilient as far as the holding steady. And then you can see where this bar is on Friday. You just had that big move back up. But so right now, the macro trend, tracking trend based on this 21 exponential moving average, still holding trend there. Now, momentum is kind of neutralized a little bit. You've had it on the, you can see on cycle one, which is a fast momentum, has pulled back. We did have a kind of a reversal here, that magenta arrow. And so, but, we're holding trend right there as far as the momentum, as far as the moving average trend right there. Now, the next thing I like to do is just knock it down to the next time frame down, the weekly long term. So we're kind of, changing altitude, lowering, going from 30,000 feet down to, 10,000 feet or whatever. So we can see a little bit more clarity to the market. And so then you can see, here's the really key moving average that I also like to follow. That green solid line is the 50 simple moving average, okay? And so this is a weekly long-term chart, and it's holding that 50. We did have that kind of break right there. And so this was, back on the 30th of March, after everything started, all the bombs started dropping, we got a pullback here. And we had to move down below that, but then you can see we had that one close here on the end of March 23rd that week, and then we bounced back up, closed above it, and then started trending back up. Now you can see, again, we're now getting another cycle reversal back to the upside, and now we've got momentum, cycle 1 and 2, which are measuring momentum, fast momentum and slow, confirmation back to the upside, and we're making new highs. So based on this, the next thing I like to do typically is, do some measurements from, using Fibonacci. And so, maybe a high to low and look at our Fibonacci extension lines up to the upside. So we can do that here in a minute. So that is looking at the S&P on the weekly. And then the next thing is drop it down one more time frame to kind of the swing trade time frame, which is the daily, and you can see it's just, just had this just big parabolic kind of rip to the upside. Now, when you have this big, huge kind of spike up here, at some point we're going to get a little bit of fatigue and a little bit of, pullback and, back and fill. And so I was just reading this morning, though, that, we may get maybe a little bit probably coming in Monday or Tuesday, we'll see, but Iran rejected and said they're closing the straits back up as long as the U.S. Keeps a blockade on Iran. They say they're not going to, allow the ships to come through as well. So that's going to probably pull things back a little bit, or maybe not. Maybe they do something else on Sunday, whatever, at the talks that are going on. But you can see we're, really kind of getting stretched. And when we get like in this situation, I like to go to kind of an indicator that I use that's kind of what I call extreme range bands, and this based on average true range. And so you can see here on the daily time frame, we've had this big spike up. So what that is telling us is that the markets are getting really overstretched from this 21 exponential moving average here when you look at the daily. So typically when you get this kind of movement, that's huge strength to the market, but it's going to usually pull back and start getting kind of a retracement back off of that. And typically when that happens is when we do get a cycle reversal, which we're not there yet. So we could still see this thing even go higher, but right now it's not a good place to be chasing the broad market indexes. It's more a stock pickers kind of market right now to look for selective stocks that are maybe rotating in other sectors that are, that have not had this explosive move up, which has been mostly the technology. So that's where you look to rotation to see what areas, the money went out of, and now it could come back into based on this kind of getting overstretched here. But this is a daily. Then when you look though to the weekly, which is the long term on this, we're still not as extreme as we've been. We're just now getting to that 2 ATR. So, we're back up here to these, over these prior highs, but very, very strong. And the NASDAQ even more so. So, this is an indicator I like to use, though, to kind of tell me, okay, let's don't chase things up here. Let's be very selective and be patient and look for good trades and not be in FOMO kind of mode based on what we're seeing here. There's always going to be a trade, setup. You just have to be patient and be looking for it. So that's kind of a look there as far as the S&P 500, and the NASDAQ is pretty much the same. So we can go back through this here in a little bit, and let's see here. The one thing I do want to do, let's do one more thing here. We can do a Fibonacci extension here. Let's see where this would take us if we put the Fibonacci levels in here real quick. I can do that, and I'll show you one really nice way to look at fib extensions, which are pretty powerful. So we're going to go from this prior high here. We'll just take that high. That's back on January 28th. We'll just take that high, this high to low here. And so you can see here, we're back to that prior high there, that all-time high here. So we're going to put extensions in. Let's see what it comes up to. Let me just reset this a little bit. You take off some of these lines. All right, so here we are. So that's going to be the next target up based on Fibonacci. Will be right here about to 7184, call it 7200. Okay, so that's a really good area to be watching for. And then, after that, you get to this 1618 up here. All right, so yeah, that spitting distance for that. But I think, look, first off, we're going to probably fill this gap. I wouldn't be surprised to see us fill this gap maybe Monday or Tuesday, at least fill this gap. I mean, you've got the gap down here, but that won't be filled for a while, I don't think. So that's a look there. You can also, here's just to point out, here's my cycle reversal. Look at that beautiful, clean reversal here to the upside. Bingo. So these are some of the tools that I use to find, the trade setups that I send out to the alert service and to our trading room, things like that. So, kind of going through the motions here that you can kind of see where we are. And we can look at, we'll be looking at a number of stocks here in a bit. So that's kind of an overview there, kind of top down. Now, before we get much further into everything here today, this workshop, next Saturday, I'm going to be doing a really in-depth, detailed workshop that will just be basically, on my scanning process. I'm going to give you and show you exactly the scanner setups that I use, the different scanners I use, and going to be giving that out to everybody that signs up. I'll be giving you those, the codes and everything, that how I use my scanners. I'll go through those today, showing you what we currently are have as far as the scanners. But next Saturday, I'll be showing you how to use the scanners, how to set these specific scanners up that you can use. And then we're also going to go through in detail how to use the synthetic cover call strategy with protective puts and things like that are really great for long-term trending trades. And another way that I like to use the synthetics is to, if you do have a portfolio of different stocks and ETFs that you're trading or investing in for long-term positions, a lot of what I'll typically do is I'll replace the stocks with the synthetic long setup. And that way I can free up a tremendous amount of cash versus having to be long the stocks that are in my portfolio. So it's a really great way to have more cash available to you that you can put in, interest-bearing accounts or something just to get some extra interest, or you can free up the cash to put it somewhere else. So next Saturday, we're going to be going through, or I'll be going through this in greater detail. And if you'd like to join this course next Saturday, let me give you the link here. And it's going to be powercycletrading.com/synthetic special is the main link. And let me give that out to you. And then you should be able to copy and paste it or just click on the link, and then this will pull up for you. So let me send this out. All right, so there's the link there. And then if you click on that, it should pull up a drop down, or you can copy and paste. So it's going to pull this up. And then there's, I've got 4 different price packages that you can select from. And so first off, let me just kind of go through the details here. But you can see here, one is we've got two different, course packages, course package 1 and 2, and then choose the one that's going to best fit your needs. And so I'll go through this how you to use it, and then we'll move on with the workshop here today. So first off, though, we're going to have this starting next Saturday. Let me kind of go through and highlight the various things. If you want to join us, click on that link or copy and paste it. And that's powercycletrading.com/synthetic special. And then use this promo code here, SCAN15, small cap. That'll give you a 50% discount off the course price. So if you do that today, this will be $167 for everybody. And so really nice, discount of over 90% off on that. So that'll be course package 1, option 1. That's going to be just, the course, recorded, live and recorded, the PowerPoint manual of that, and a few extras. So that'll be $167. This will be your, as far as long as you want to use it. So it'll be in a members vault that you'll have, and you'll have a code to it, so you can always go in there and use it. And then if you want this with the extras that I'm going to give you with this course today, all the different bonuses, which will include the scanners and the additional bonuses. This will be the regular price $232, but just for an extra $30 for these bonuses and the scanners, it'll be $197. So that's course package 1, option 2. And so that'll give you the live and recorded course, the scanners that I'll go over and cover here today, and all the additional bonuses. And so $197 just for an extra $30 on that. And then if you'd like this with my alert service included, this would be course package 2. So that will be two different kind of options you have on that. Would be the option 1 is that just the live course, the alert service, and a few extras. You'll have that for 4 months. You'll get all the alerts. I have 5 different types of alerts, and then 4 months to my trading club, you'll get that. And this is normally $597 today. With that discount code of SCAN15, will be $507. There's a 2-pay. Then if you want this package, alert service package here, with all the scanner details and the bonuses, that's option 2. And that's going to be just an extra $30 there, $537. So we'll go back through this here a little bit later, but that's kind of put that out in case you have to leave early and utilize that and take advantage of it. So that's powercycletrading.com/synthetic special, and then use that promo code small cap SCAN 15. All right, put that in. When you pull it up, I'll show you real quick how to do that if you're not familiar. So pull this link up, get the link up, and then you'll see the different packages here. Here's course package 1, and this again starts next Saturday, be live and record 11 a.m. Eastern till 2 or however long we need. And then we'll do a follow-up dedicated Q&A on Tuesday after the course. So come down here, and if you want the package 1, just option 1, which will be all the live course material and recorded session as well. Plus, I'm going to give you a 30-day trial membership to my trading club. So that gives you access to our trading room and Q&As and things like that, plus the follow-up Q&A that we're going to have after the course. And then I'm going to give you my option trading tutorial. So if you want this package, this is $167. Just click on Buy Now, put that promo code in, SCAN15, and that'll knock off 15%. So just put in that SCAN15 right here, knocks that off to 167. And then if you would like my indicators, which are my momentum indicators that I'll be using today to show you, that I showed you a little bit earlier, you can get those if you want to add to your purchase for $195. You'll get all my momentum indicators here. Just add to your cart there. And these are available for Thinkorswim, TradeStation, NinjaTrader, TradingView, eSignal. All right, so that's a look there. That's course package 1. If you want it with the everything here, I've got I'll show you kind of outlined here what you're going to get with course package option 2 for that extra $30, $197. You'll get my volatility scanner, so you're going to get that. That's what we're going to use in the course. I'll go through this today and show you what's kind of popped up on it. You're going to also get this scanner, which is my momentum crossover reversal scanner. So you'll get that. That's with course package 2. Now, if you do course package 1, you're going to have access to the course, and we're going to go through using these indicator scanners and things like that, and showing you how to use some synthetic covered call strategy. That'll kind of be taking reviewing the strategies and all that stuff. But if you want it with these additional bonuses of indicators and scanners, then do course package course package 1 option 2, and just that extra, you're talking $30. You get all this stuff. Okay, so then you'll get also my 30-day trial membership to the club, which gives you access to the trading room and a lot of other benefits. But I'm also going to be doing a new alert service. It's going to be the synthetic covered call alert. So I'm going to just start this this month, and so this will be giving you also a 30-day trial membership to this new alert service that I'm going to start, which will give out to members the synthetic covered call setups that I think look good. So I'll be sending those out by alert, so you'll get access to that for 30 days. That'll be $147 a month when we start doing that. You get the follow-up Q&A, option trade tutorial, everything there. So that's what you're going to get with option 2, and again, that's just an extra $30. So I mean, it's definitely worth the money to do that. So you just come down here, again, click on buy now, and come down here to the you'll see everything listed there that you're going to get when you purchase. Put in that small cap scan 15, and you're going to get the discount there, 197, so extra $30. You get all those extra benefits there, the scanners, the two different scanners, my Fibonacci price target mapping course, and the access to my synthetic covered call alert service for the next 30 days. So that's going to be something brand new. And then you can also add the indicators here if you want. And then the next package, just to review that real quick, is if you do want to have access to my alerts, this will be package 2. And so here's just a kind of brief overview of the alert service performance so far. So this is for year to date, today through 2026 through Friday. These are unaudited win break-even rates. We've had 40 trades closed out so far for the year, 28 winners, 5 break-even, 7 losers, running a good winning percentage. Actually, we're at 83% win rate right now, but high win rate, win break-even rate on this. And then you can see what we've done since the inception of the alerts when I started back in 2018. And for last year, we had through the end of the year last year, 2025, we were running a 79% win break-even rate. So really actually stellar results, and especially if you consider what we've been through so far this year. The market's going up and down like crazy. Being able to maintain 82% like that's pretty good. And then last year maintained 79%, and since the inception back in 2018, we maintained 79%. And again, these are unaudited, but we've had really good success with the alerts that I send out. And what we're going to go through today is the exact process as far as how I find the trades, and where I put together my watch list of trades. So that's kind of what we're covering here today. So you can see everything you're going to get here, but we'll just kind of flip through here. So if you want package 2, which gives you the alerts, I've got 2 different options. Option 1 would be just access next Saturday to the live course, and a few of the little extras there will be 507, not normally 597. So you just put in scan 15, and if you do want the alert service plus the additional scanners and those additional bonuses that we'll talk about a little bit more, again, just for $30 extra, 537, you get everything. So come down here, and if you want the alert service and the minimal, option 1 would be just the course and some of the minimal things here, just the 30-day trial membership to the trading club and access to the course, things like that. Option trading tutorial, get that. So put in scan 15 there. and put in small cap, and you'll get this for 507. And again, if you do want the add the indicators, you can do that down here. And then if you want the alerts with this package, that will be option 2. And just click on that and then do the same. But you're going to get everything here. You'll get the 2 different scanners that we're going to use. You'll get that 30-day trial membership to the synthetic alerts that I'm going to be sending out, and then the scanners, all that stuff there. You put in scan 15, and that'll drop it down to that price of scan 15. Hold on. That'll knock off 15%, and there you go, 537. And again, just extra $30, and there is a 2-pay. Now, here, just to point out, you can pay with credit card right there or PayPal, and there is a 2-pay if you'd like to use that. All right, so kind of wanted to cover that real quick in case you did need to take off early. And if you do want the alert service part of it, you're going to get this for the next 4 months, all 5 of the different alerts that I send out, plus the new alert service that I'm going to just start. And then 4 months of the trading club, you'll get that. And you can start and stop whenever you want. So if you take off on business or vacation, you're not going to get use your time up. So take advantage of that, and we'll go from there. And if you have any questions, let me know. Hold on. Scan 15, not scam. Yeah, right. Okay. Scan 15. There you go. All right, so that's a kind of overview there. Now, the next thing is, is all about finding the trades, right? That's the hard part. A lot of times is just finding the good trades, and been pretty good at finding good trade setups. I mean, we're running currently 83% win break-even rate, and 79% since starting back in 2018. So this is kind of the way that I go about it. I'll look at the sectors, to see where the money's flowing, and then I'll break down within those sectors to see, what stocks are moving, and then I'll put them through my scan. So that's one of the first steps that I'll take. So this kind of sector rotation is really important. Now, the next thing I'll do is I've got these 2 different scans. This one scanner, this will give me a list of everything that's in what I call a volatility squeeze. And the volatility squeeze is when you get a price consolidation where the market, you've had a big move, maybe up or down, and the market starts to churn sideways, and then at some point will break out of that sideways pattern, giving a very, very fast momentum breakout to the upside or downside. So typically, a lot of times you might get a big spike up, and then you'll notice the market's kind of churn sideways for extended period of time. And then at some point, we'll either break up out of that squeeze pattern or break down. All right, so that's kind of one pattern that I like to look for. And this is the scanner that I use for that. And so you'll get this, with the course if you do option 2. So this will give you a breakdown, and you can set this up for any time frame that you want to scan it for. So I like to, basically look at the medium term swing trade kind of time frame. So that'd be a daily. So I've got this as SQD, that's squeeze daily. And so this populates everything that I have on this current watch list of mine, everything that's in a daily squeeze. And then, I can also see then whatever has triggered out of a squeeze. So this will then stay up for 3 bars or 3 days after. So a lot of times after something's broken out of a squeeze, you can still get into it. Sometimes they haven't run too far to the upside or downside, so you can still get in. So we can take a look at a few of these, but that's kind of the first one of the scanners that I like to use. And then we'll come back to this in a minute. And then what we can do is I can take the same scanner that my code is embedded in the scanner, and then I can go to the weekly time frame, so I can look at out to everything in a weekly squeeze, which sometimes these can become the really powerful long-term trade setups. Okay, so I can go out looking for weekly squeezes here, and then if I want, I can go down and look into the S&P 500, the S&P 100 stocks, and scan those. So here's a current scan that I just did. It'll show you everything from the S&P 100 list of stocks that are in a daily squeeze, and that you can see J&J, you can see Mondelez, Amgen, things like that. And then I can also go to the NASDAQ 100 and do the same. Now, when you see the scanner here, you'll notice a couple of different things. The information is that you'll see a number here says 13. So this is like for, let's say, for example, Charter here, Charter Communications. So you can see here, this is a squeeze on the daily. So this has been in a squeeze, this sideways pattern for 13 days. And currently it's green. The color code is green because the momentum is up based on my momentum indicator cycle 1. So it color codes it. So you can kind of see it quickly to see, okay, this is a momentum to the upside. It's been a squeeze for a long period of time here, and kind of gives you that quick information to assess, what you're looking at there. So that's a look on that scanner there. So we'll pull up this here in a minute, and we can go through a few, see what they look like. And then the other scanner that I use is my reversal scanner. So this is a really scanner that I set up that everybody will get also in the course next Saturday. And this is these scans are based on reversals, based on a certain reversal pattern that I've coded into the scanner. So this is a scan that I did, Friday after the close, and you can see a few things have popped up. And then I'll go through these to see if they look, decent based on the chart patterns that I like to look for, et cetera. And then, put the trade out to the trading room or to the alert service. So you can see here things that have popped up here. This was on Friday's close. ACN, that was Accenture, Amgen, not a whole lot. FIVE, Dollar General's, just a number of things there. I didn't really see anything that looked that great, but this is where my first kind of start is. I get the list together, then I look at the various stocks within the scan that is put out, and then I see if they look, like something that we'd want to do based on the chart pattern where they are, based on the option trade setup that we might want to look at. So this is kind of the first step, first start of the process. So that's the look there, and then I can also, then flip through it. So let's go and look at a few of these so you can get an idea of what they look like here. I'm going to pull that scanner up, and I'll pull my, let me pull a chart up that I like to use real quick. 1 second, let me find the right charts here for you. One second, I'm going to get a different chart here. Okay. One second, here it is. Okay. So what I like to do is I like to, when I do this kind of scan process, typically I'll use kind of a 3 chart setup, so I can see where the intraday, chart, the really fast 2 minute. What I'll typically look at is like a 5 minute here, and then the 4 hour in the daily. Okay, so then I can quickly scan. Click. I'll show you how I've got it clicked and set up on the scanner, so I can have it linked to my charts, and I can quickly flip through all of these different ones that are in the scanner to see if any of them look, like something I'd like to do as far as a trade setup. So I'll do this, and then the other thing I like to use is I've got another indicator that is really helpful, and this is kind of monitors the shows me everything in a squeeze or momentum upside or downside. I'll pull that up real quick, and then we can flip through a few of these real quick if I can find that other chart. I should have left it up. 1 second here. One second. Where did it go? Here it is. All right. So we're good to go. So let's flip through a few and see if any of these things make sense. And so get an idea. And this is always changing. Obviously, the prices are moving, data changes, all that kind of stuff. So going to pull up the scanner here, and we're going to go through my current watch list. And so you can see here everything on the scanner right here. You've got W, Wayfair, it's been a squeeze for 24 bars. That'd be 24 days. Here's an ETF, TAN. So we can flip through a few of these, and then, this is the start. And then if they look decent from within the chart pattern, then I'll drill down and then, maybe look at an option trade setup and go from there. So let's go through a few of these. So here's W day, Wayfair. Let me put this on a candlestick chip pattern here. So you can see the squeeze here. So those dots represent the squeeze pattern. So see this, so the W's had a big sell-off, and now see it's consolidating down here at this bottom end of its range on the medium-term time frame, and trying to see if it's going to have enough energy to break through these key moving averages. That's the 200-day right there, and the 100 and the 150-day moving average. So that's the daily time frame. And then the other thing I always want to see is where is it on the on its weekly time frame, which is long term. Let me pull that up. We can get a quick look at that. So I didn't see anything really great as far as setups right now, but here's W day. Doesn't look too bad, actually. You can see here it's had that huge sell-off right here, and see it's trying to kind of form this kind of bottoming price action, kind of rounded, but not quite ready to go. It's got earnings coming up here next week, I believe, and so that's going to probably be what's going to maybe trigger it. So anyway, that's a potential. So that's where you start. Then if you're, you put this down into the watch list, start monitoring that. So that's a W, and then here's the ETF TAN, which is a solar ETF. Now this doesn't look too bad. You can see this, it's above all the moving averages, and it's just really in a tight consolidation sideways pattern. So this one has potential here. Yeah, so this is one that I'll put down on my watch list, TAN. So I'm going to kind of start a new list here as we speak, and I'm going to put that one down. Then, I like to double check the weekly long-term pattern here, and you can see here the TAN has had this, look at that beautiful move up, and now it's just going sideways, holding, that's the 200-week moving average. So it's trying to consolidate, hold this area here. We'll see if we get a movement to the next leg up, which it could. So that's a look there at TAN. Here are a few others. Here's Medtronic, MDT. This one not too good. This one actually definitely could potentially actually break further to the downside. So this is one that I would put on the short side that I'd be following as far as a potential short. So Medtronic, so you can see it's in a sideways squeeze, had a big sell-off here. Momentum is pulled back, it's kind of neutral, but if you look here to the long-term weekly chart, you can see it's down here, and if it starts breaking these lows right here, it's about 85 on a closing basis, then this one has definitely more downside, down to 80 or so. So this would be one that I'd be watching for a potential short trade setup. And here are a couple others. Here's one, Valero, which is a refiner, and you can see it's had this huge move up, but right now potential to break down, pull back a little bit more, but not too keen on selling energy refiners right now. But anyway, it has potential for more downside there on Valero. Let's see if there's anything else interesting here. Here's one that could get a little support. Here's Dollar General. This doesn't look too bad. This is one that's had a big sell-off, and now it's starting to reverse up. So this is one that I definitely have on my watch list as a potential long setup, and this is one that we're going to look at, in the trade room next week. This is one that I did pick up on, and I like the looks of this one. Yeah, and I had this one written down to look at this one for a trade setup. We may want to be doing this one Monday. So this is Dollar General. You can see here on the weekly time frame, it's come down here to this kind of 50 simple moving average and holding that area here. And you can see this is what we call price action support. So it's been holding down here. So this looks pretty decent, trying to turn the corner. So that's definitely one I want to look at. A couple others that I'd like to look at is, let's see here. Those are the main ones. And then let's take a look at a couple of the reversals. Well, let's take a look at the weekly as well. So I'm going to pull up everything in a squeeze on the weekly. Here's the weekly time frame right here. So we've got NVIDIA now on a weekly squeeze. Let's check these. Let's check a couple of these out. So I'm going to put my chart now on a weekly here. And I'm going to put this over to the daily, and then we can look, see what these look like. All right, so let's flip through a few of these that pop up on a weekly squeeze. Here's NVIDIA. See, this thing looks like it's about ready to take the next leg up. So I definitely put this one down. It's got earnings coming up, but NVIDIA has been really dogging it, right? For look back here, started going sideways back in August. So this thing looks like it's about ready to pop for the next leg up. Probably going to wait to earnings to see what those come out. Let's see, earnings are coming up here the 20th, around the 20th of May, but this looks like it's maybe getting set up for the next leg up. So then if we look over to the weekly long term, which is the squeeze here, you can see, look at that consolidation here. So this could be the next leg up. So I'm going to definitely be monitoring NVIDIA, potentially the next leg up. Okay, that's one that pops up. And let's see what else we have. We can look at a couple others here real quick. I've got, let's take a look at Cisco and TJX. Few of those, and then we'll move on. So there's just so many things that you can look at, but here's a couple more. Here's Cisco. Yeah, this looks good. See, it's starting to break out. Put this one down. This is a weekly long term. Looks pretty good on Cisco. Yeah, it looks like it's headed, first stop will be back up here at that prior high. So that looks pretty good, Cisco. And we'll take a look at one more here that, let's take a look at TJ Maxx, TJX. Yeah, TGX consolidating, it's really choppy. Nothing really on that one that I would look at. All right, so that's just a few things on the squeeze. Now, let's take a look at a few of these on the reversal setups here. Let me pull over. We'll go back and look at a few of these. So this is a scan I did on yesterday after the close here, and a few that popped up for a reversal setups. So we'll take a look at a couple of these. ACN was one. Amgen looks kind of interesting here. And that was really it. And also Bristol Myers. So here are three that have potential, I think, that we'll be looking at next week, next Monday. And these are, maybe Accenture, Amgen, and Bristol Myers. Kind of went through those. Other than that, the other ones, nothing too outstanding as far as potential. So let's take a look at a few of these. So one was Accenture. Let me put this back to the daily, medium-term swing trade kind of time frame here. And then we'll put this, I like to kind of monitor the 4-hour alignment with the daily. So here's Accenture, ACN. Yeah, see you've got, again, here's the reversal. See that orange arrow? Potential for reversal back up. That doesn't look too bad. It's going to have earnings coming up, though, I believe. But anyway, this is one that you might want to take a look at. Yeah, you can see here the weekly, it's just been hit really hard. And, these, could easily, just from a swing trade, could easily move back up. Here it is, trading at 199, but here's the 21 exponential, that's up at 210. So this could be, $10, $15 up just to kind of that area there. And then if it breaks through this, then you've got, here's your 50 simple up here at 250. So this, definitely has potential. You can see how it's been trending down. So with this market starting to turn around last week, you're going to see rotation, into some of these other areas that have been just, lagging versus the tech sector. All right, so that's one to watch. Here, a couple others, Amgen, Healthcare, and Bristol Myers are two that look kind of interesting. So Amgen looks, really pretty good because look at the moving averages. It's got stacked below it. It's got the 150, the 200, and all it has to do is now it's breaking above the 21. All it has to do here is break above this 50, and it has good potential. So this is one I would definitely put I'll say a triple star or something like that. So that looks pretty good. You see it on the weekly. Pull back here. This is what, major price action support. See this area through here? You just draw a line horizontally. This, see these tops right there. Pulls back here. It had that spike below it, but popping back up. So that definitely has a good potential. And then the other one was Bristol Myers, BMY, another kind of drug healthcare. Some of these are starting to get a little bit of stability here. So you see this one is also starting to push back above that 50. It's above all the key other moving averages. So that's a really good positive thing there. So this looks actually pretty good. All right, so I'd say, these are trades that we'll be looking at, in the trading room on Monday. All right, so that's a kind of a review there. Let me see here. Okay, let me pull my, okay, so that's a quick overview there of some of the ones that have popped up. Now, every day I'm doing this scan, and that's, this is where I find all the trades, just doing this process. Now, here are the reversal trades that I like to look for, and that's, when you see these orange arrow, this is a reversal momentum, reversal up or down. All right, so here's just to give you an idea. That's the scanner that we were just looking at right here. This scan right here. This scans for a reversal pattern, okay? And then here's my indicator on the chart. That pattern, that reversal bar is color-coded with an orange arrow. Okay, so here's just for example Google, and these are weekly long-term charts to show you the potential of these kind of trends if you catch it, at the right point. So here are just a few examples quick to go over. So here's Google, just spotted a few. Here's back here. This was April 2024 right there. See that orange arrow? See the reversal right there? So it went, here was 141.18 and all the way up to 180, pulls back. Here's another reversal right there. Moves back up, pulls back. Here's reversal to the downside. See that? Pulls back down. Here's a reversal to the upside right there. Look at that beautiful trend up. And then we just got another reversal here, a new fresh reversal on Friday. So Google is poised for maybe another break, another big leg up past these all-time highs of 341. All right, so that's a good look there. Here's just another example of NVIDIA. This is an older chart. I haven't updated this, but look here. So we can look at this real quick. But here's NVIDIA. This was a cycle reversal back here last year, right there. Look at that. Now we're just getting another one right here. Let's pull up NVIDIA. And this is the weekly. So looking for kind of a longer term trade setup, right, for a trend. And then these are the types of trades that we'll be talking about, maybe using a synthetic long. Let me pull up a different chart here real quick. All right, I'm going to pull up NVIDIA here. And I'm just going to look at the long-term weekly. All right, so here's reversal back here. This was May 2025. Beautiful move up. Now here was another one. It just kind of went sideways. This has been really going sideways, but now we just had another reversal bar up. So what this is telling me is that we could, be shortly, we could be starting to see another new leg back to the upside for NVIDIA. So that's a look there at NVIDIA. Here are a couple more that we can go through. Here was Amazon. So here was if you look back at Amazon, this was going to a cycle reversal back here in September of 2024 right here. Then you had a cycle reversal down weekly, comes down. Here is back to the upside right there. And let's see where Amazon is currently. So this would be, these are picked up by the scanner. And then I can, go over and check them out. So, first, without having to, comb through hundreds of charts every night, I just do the scan. Here's Amazon. Here, see another reversal. This was this week. Look at that big, huge rip to the upside. Here's reversal there. Now here's chop. But beautiful right there. Here, see these patterns right here. There's a really good one right there. Reversal there. There's a little bit of a pop. Okay, there's NVIDIA. I just had a few of these I wanted to show you. Here's Palantir. Everybody likes to follow that. PLTR. Put that one up. Had a reversal back here. So here's Palantir on the weekly time frame. So you can see really powerful right here. This was back in April 2025 right there. Now here it goes chopping sideways. Here's a reversal to the downside. Had a pretty decent pullback. This, again, this is weekly 175. Made a low down here at 126. We are starting to get a reversal here on that as well on the upside on the weekly. All right, so that's kind of where I find everything now. The next thing is, let's talk about the synthetic covered call strategy. This is the other part of the course that we'll be covering this next Saturday. This is one of the great trade strategies for kind of trending trades where you can not have to buy the expensive shares. So it's a really great way to replace anything, stocks, ETFs, anything in your portfolio. You can, like I said, I do this a lot with our portfolio that I have. That could be having QQQ or SPY, or it could be EEM, whatever is in my portfolio based on kind of the rotation that I use a couple different things. But instead of buying the stock, I might buy the stock and then I'll replace it with a synthetic long. And so this is just a great way to do it, to free up money, and you can put your cash somewhere else to earn you some additional interest, or put it to work somewhere else. So this is the other thing we'll be covering next Saturday in the course. But to give you kind of overview of what it is, this is what we'll be looking at. So a synthetic long strategy, what it does is just replicates the payoff of you owning the underlying asset, such as a stock, or it could be ETFs. It's great for ETFs as well. But what this does, then, it allows you to gain your exposure to the price movement of the underlying asset, but requiring just a initial, small fraction of the cost compared to you owning the stock, the ETF or the stock that you might be wanting to buy. It could be Amazon, it could be Google, whatever. It could be Microsoft. So it's a really great strategy. And then what I like to do is then you can write calls against the synthetic long. So if you're long the shares, you get the income from writing calls against the shares you own. But with this strategy, you replace the shares with a fraction of the cost by doing a synthetic long, and then you just write the shares. You sell the calls against it, amortize down your position. And so you can amortize your cost down at a super fast rate because the cost is so much lower. All right, so it's a beautiful strategy, for trending, kind of markets, things that you like, that you think are going to be a longer term trend. Or if you do, like I said, have a portfolio that rotates into, certain assets for, extended period of time. So like, for example, last year, I had a great position in EEM for, several months, and just ended up with, synthetic long against it, and freed up all my cash from the shares, sold the shares off and replaced it with synthetic. It was just a fantastic way to go, and did the same with SPY, the Russell, things like that. So a lot of different things you can do. So that's basically what, the kind of the overview of what it is. Now, what the best kind of setups is if you can find cycle low reversals, like I just showed you a few, on NVIDIA and Palantir and Amazon and Google, but what we call a bear to bull, right? You've had a big sell-off and then it reverses. That's the best pattern to find these kind, to do this, but that necessarily is not the only one to do. Like I said, I'll do this on a portfolio of different stocks versus just a pure bear to bull kind of reversal, but this is a great pattern to do it from. So here is just an idea. This was one on Google that currently still have set up, but you can see this was the monthly macro, and this is Google, and here this is a bear to bull. So the market had shifted down. You can see it broke down. You had that reversal here. This was back in 2022. All right. So back in 2022, we had a pretty big, we had a bear market basically. So we had a pullback here. You can see this is the monthly time frame. It broke the 21 exponential. That's kind of what I use to track trend, and it trended down. And then, you get down here and you had this turn, right? Now we had the reversal right there. So that's kind of a bear to bull reversal. And then look at this trend. Then it really started moving. Now I ended up putting a synthetic long right there. Okay, so it pulled back and into that 21 and set up a synthetic long, and I'll show you this in just a minute. And been sitting on this since this back here in March of 2024, and I'll show you where that is currently. So here was where this synthetic long was set up, and Google is trading at $141.18. So you can see it pulled back here to these tops right there, came down, and then it started breaking back above these tops. So got in here long, and instead of using shares, did it with the synthetic, okay? And then it started moving up, pops up really hard. All right, so let's take a look. So this is what you can do using the synthetic structure. So here it is, the weekly, just kind of breaking it down. So here, I showed you a couple of these earlier. So here's the one that I set up, was back here, right there. It was trading at 141.18. Has a move up here, pulls back. Here's another one right here. Could have done it right there. Here's another one right here. Could have done that. Now it's setting up again. Now this had such a rip. The perfect scenario, but if it hadn't just ripped up here, this would have been a good place to kind of probably reestablish maybe a new long position, longer term for Google. Now, since it's ripped up here, we'll see if it kind of pulls back a little bit. I wouldn't chase it right there, but that's what you can look at, as far as kind of these setups. So that's a kind of a perfect kind of setup to be looking for. Yeah, so no, you don't buy any shares with a synthetic long. Okay, I'll show you how it works. Yeah, you can use a scanner for day trading, SPX. Yeah, for sure, because the scanner, see, I can put my scanner here. I don't have it set up. I can set this up on any time frame. So I can set this up on a 5-minute time frame, and then I can scan. That's a good idea. Scan for, a breakout on the 5-minute. So, when you buy the scanner, you'll get the instructions how to set up, and then you can set up whatever time frame you want. You could do 2 minutes if you wanted, 5-minute, 10-minute, whatever. So that definitely can do that. All right, so here's the weekly. So here's the look there at Google, and then here is kind of currently where this trade is at the moment. So I wanted to show you the possibilities here, and this is what we'll cover in detail next Saturday, is how to set up these synthetic longs, how to look for them with the scanners, how to set them up, and then how to manage it, using a covered call kind of strategy with a protective put. So we can do that. We can add a put to it, and do a lot of different things here. So this was the one that I set up. This was back on the 15th, March 15th, 2024. Google is trading at 141.18, and here it was yesterday, closed at 341.68. So let's take a look. So this is a synthetic long spread with a put to protect the downside. Okay, and this was set up back in March of 2024. Just some other kind of benefits, just in general, just summary. Smaller upfront costs, just a fraction of buying the shares. Great for traders with limited capital, but just great for traders or investors in general, because you can free up your capital, put it somewhere else, put it, high interest bearing, something if you can find some good interest, or you can put it in some other assets. Gives you the chance to free up your capital for other investments. Has this built-in leverage, but you can control large positions with a lot less capital. Like I had a big position last year on EEM, and like over 6,000 shares, but did it with synthetic long, like 60 contracts. I mean, it's just a fantastic structure. Great for medium to very long-term trends on a security. So you can then design it to give yourself some downside protection, buy a put, so you can do it with a protective put below it, which I'll show you how to do that in the course. And then great for, covered calls. So we can start selling instead of amortizing down shares that you're long, we can amortize down the synthetic, and you can amortize it to zero pretty fast. Now, these are trades that you can set up for 2 weeks out to 2 years out using leaps. Great for leap kind of contracts. Great for certain hedges, and always going to give you positive data when you do this structure. All right. So those are some of the benefits. And here's Google to show you what this one currently looks like. So here's the first example here is to show you if you did this. This was doing Google with a covered stock, long stock with a protective put. All right. So this was going long the stock back here, on the 15th. The stock was trading at 141.18, and the stock with a protective put below it at 110. That cost then was the covered call with the put, or the covered put. This is the covered trade where you're long the shares. This would be like 100 shares with one put against it, long, to protect the downside from if it broke below that 141, 140. So 110 was the put. So that total cost was $148.80. Okay, for that spread right there. So here's what that went out to. This was on Friday, so you can see the difference between the two structures or strategies. So here was the covered stock value, okay, and it was trading now on Friday. The market went out with Google at 341, basically $341. This was taken today with the analytics, but it was today's analytics 341. You can see that's where it was. All right, so this value of the stock with the protective put, then that had blown out to 342.07, $342.07 on its covered stock value. Okay, less the cost of the setup here when it was set up on the 15th of March 2024. It was going for 141.18. So this would be long 100 shares of Google, and long then one put at 110. All right, then you could do, if you wanted to do 10, you could do, however, but this is just 100 shares with one put protecting it. So that was the value on Friday, or today's value on the analytics, less where that was put on back on the 15th. So the increase in value of this was 193.27. That's, times 100 to, make it equivalent to those 100 shares, right? So this was up $19,327, okay, from the 15th of March 2024 through, the close yesterday, or using analytic price today. Now you can see then that's a return of 130%, right? Okay, not bad. But here's the beauty of the synthetic. Now look at the difference here. So if you'd done the same trade though, replacing the stock with a pure synthetic long, look at the difference. So this was going out and used the 18 June 2026. Now remember, this was set up back on March 15th, 2024, trade at 141.18. So this was, going out kind of elite options here, that 18 June. So then yesterday, it closed at 341. All right, so that spread value, when this was set up, the synthetic long with the protective put below it, that cost was $21.18. Okay, so that's a synthetic long with the, when it was trading at 141, used a $140 strike with a $110 put below it, just like the shares. So you can see the value of this when it was set up was 21.18. Okay, now yesterday that spread went out at 203.59. So this was up $182.41 per option spread, right? Which would be $18,241 if you did one contract, synthetic long with the protective put. That's without even selling calls against it. All right, so you see then the difference here, that return then on the cost of the original setup, 21.18, that's $2,118 per one spread. the return is 861% on that, versus if you did the covered stock, the stock long with the protected put, you had a return of 130. So almost 7 times more than the doing the shares. And this also, see, has a delta of almost of 1. So it's pretty close. So you're not losing any time on this trade if you do it right. So that's what we're going to be going over, and I'll be teaching you how to do this, and then manage those trades next Saturday. So, for for 167 bucks or 197 if you want to add all the tools plus if you want to do the alerts, it's a really great strategy course for everybody. So hopefully you're going to take advantage of this and sign up and join me. So this will be next Saturday, live and recorded course, and this will be starting at 11 a.m. Eastern till 2 or however long we need, and then we'll do a dedicated follow-up Q&A on Tuesday after this course. So if you have any questions, come on in, and so and fire away with questions on that. So here's all the details of what you can do if you want the course package 1, which would be, I've got 2 different options again for you. This would be the bare minimum, where you just get the live course, the strategy workshop, and you're going to get also my 30-day trial membership to my trading club. So you'll get that as kind of an extra there. And so with the trading club, I've got the virtual trading room. You can come into that, during the week. My live Q&As every Tuesday, and some other benefits there. And then we'll do the follow-up Q&A. You'll have access to that. And then I'm going to also throw in my option trading tutorial. So all this stuff, and good value of over 2,100. So use that promo code SCAN15. You'll get this for 167, and that'll be option 1 under package 1. So again, use that link I showed you earlier, and let me pull it back up there for you. And then option package 2, option 2. Then this gives you all the extras, the bonuses, all that stuff you can see here. All the stuff you're going to get here. You'll get my 2 different scanners, the volatility scanner, squeeze scanner, my momentum crossover indicator and scanner. I'm going to give you the indicator as well. You're going to get my price target mapping, Fibonacci course. This is what I use for all the trades that we do. 30-day trial membership to the trading club, plus access to my new synthetic covered call alerts that I'm just going to start. This will be brand new. You'll have access to that for 30 days. And then the follow-up Q&A and the option trade tutorial. So, all that for just that extra $30, $197, and you use that promo code SCAN15 and put that in. Here's the link here, powercycletrading.com/synthetic special. Okay, make it easy for you. Put it in there, click or copy and paste, and then put SCAN15. So that's a course package 1, option 2. So a lot of times, I've got members or whatever, they might already have these indicators or scanners or whatever. So that's why I kind of have it broken down this way. So if you just want just the bare minimum, 167. If you want the add-ons just for the extra 30 bucks, boom, 197, you're done. And then if you do want the alerts added to it, that's course package 2. And with that, then you could do either option 1, which would be just the bare minimum of the course, or you could do it with option 2, which gives you, all the bonuses, the scanners, everything. Now in the course though, we'll be going over how to use a scanner, so you'll get to see how we set that up and use it. But if you want the actual software, then you do just pay the extra 30 bucks and you'll have it. Now when I do the alerts, I've got 5 different types of alerts that I can send out, and it could be a butterfly or a long condor. We had a great butterfly on last week with had a couple of different ones, but we had one with Google that made over 1,000%. I'll show you that in a minute. So these are types of alerts. That was alert butterflies or condors. Those are setups that'll be sent out by the alert service, or it could be a calendar diagonal. We do a lot of those. It could be a monthly pending trade, which we do with a butterfly or calendar, or it could be breakout trades, debit spreads or credit spreads. or selective earnings trades. So 5 different types of alerts that are sent out. And you'll have these then for the next 4 months, 5 different alerts potential, and then 4 months plus on the trading club as well. So that would be everything in course package, 1, option 1 or 2, and then that's what you get if you do option course package 2, and then select from the different options there. So again, just if you do want the alerts to make it real simple, here's what you have. If you want, option 1, just the cores and a few of the extras, then it's going to be 507. So just again, just the extra $30. 507, the regular price 597 with the discount of 15 off. It'll be 507 if you want the additional bonuses and everything added to, just for an additional 30 bucks, 537. So that's what you get there. Now with this Elite Open to Close alert service, you'll get the trade alerts, 5 different types that I send out for the next 4 months. You can stop and start when you want. These are, stocks or ETFs that are sent to you by alert. So it could be a calendar diagonals, could be butterflies or condors, could be a monthly penny trade, could be breakout reversals. These are debit spreads or credit spreads, or it could be selective earnings trades, which then I'll send out with a certain options strategy as well. When I send these out, I send it out with a trade guide of what to do. A lot of members just do their own thing. They'll just buy calls or puts, depending on a directional trade. But I'll always send it out with an option-specific options spread strategy to use with the alerts that are, based on the market condition, what I think will be the best option trade for the chart pattern, whatever. So that's sent out with it. Then I do a setup video review, of the trade at the end of the day to kind of give you a little bit more information of why I did the trade, what I'm looking for. The trades that are, listed in archives, so you can go back and look at them. Then you're going to have access to the weekly Q&As that we do live and recorded every week. So you'll have that access for the next 4 months. And then I do a video newsletter every day after the close. You'll have access to that for the next 4 months. And the trading coaching room that we have, you'll have access to that for the next 4 months. And then anything on my website, if you want any of my other courses or software, you'll get a 50% discount. So that's going to be, everything you get if you do course package 2, and then you've got a selective, option 1 or 2, depending on if you want the, extra bonuses things. Now, when I send out alerts, I use a service it's free. It's called Telegram. So it sends it out within seconds, so you can see everything. That's kind of what it looks like, Telegram, but it's a free app. And here again, the alerts we've got, through Friday, we've got actually 83% win break-even rate. We had another trade that we set up, we put on Apple trade, and just exploded to the upside on Friday. So I had that trade set up, which looked real good. I can show you that if we have time. And then we've got, that's what we're running so far through the year. And then for 2025, we had 151 closed out, 101 winners, 19 break even, 31 losers, win break even rate 79% there. And since starting the first part of the service back in May of 2018 through yesterday, we've had 1,007 trades closed out, 716 winners, 78 break even, 213 losers, win break even 79%, unaudited win break even rate on all those. But that's what you're looking at if you do want to add the alert service to it. And then remember, you'll get 30-day trial membership to my new alert service, which will be the synthetic options. Now with the course, here's kind of an outline of what we're going to cover starting next Saturday. First, we're going to go through part 1, will be how to identify these kind of high quality setups. So we're going to go through the scanning process that I kind of briefly touched on today, how that's done. We'll go through how to set up the scanner so you can use it, and start doing your own scans. Or if you do the alerts, you can just wait, let me do it for you. But these will then, the scan-based process that'll help you then to spot these new breakout setups before they get triggered, right? Spot reversal opportunities before the momentum shifts. Then you can, start to build your own kind of watch list that you can start monitoring, each and every day of these hot trade setups, and then, start pulling the trigger when they're ready to, jump in on. So we'll go through that, how that works, things I look at as far as, what to look at for the triggers. And then this is going to really help you to get, really high quality trades and not be chasing trades or over trading. So you're going to stop chasing and you're going to start getting positioned earlier with this kind of, really kind of process that you can kind of go through each and every day to use. And then part one, part two is then the other thing that I like to add to it is, what I call kind of the, the market environment that we're trading. That's when you're adding your seasonality, and then you're adding the overall broad market trend, to kind of give yourself a clearer picture of the overall trend of the market. So it's very important that you trade with the trend of the market, or at least if you're going to go counter trend, it's a counter trend trade. So this is just, kind of how to look at the market environment you're trading in. So you're going to see then, how to align your trades with that broad market direction. So I'll go through how that's done. Adding seasonality to it if you, have the seasonality and stuff like that, that you can look at the, the seasonal. Do we have the seasonality to the benefit of the trade, to the wind at the back of the trade? Currently we do have seasonality in the favor of the equities right now. And then, what to avoid is unfavorable conditions. So there are a lot of things that you can factor in, as part of what we call the market environment. So this is then just going to help you to get better timing and, higher probability trade setups overall when you add some additional context to your trades. And then part two, we're going to get into the income foundation. So we'll just go through a brief review of the kind of the vital Greeks that are really important to, understand for this synthetic covered call income strategy. So we'll go through this, just kind of make sure that you kind of understand some of the basics that you need to understand there. And then, so the option income guidelines of the, just basically, how to use your theta, delta, things like that we use. And then, how to use your, option pricing, and then how time and volatility affect price. So just kind of understand those concepts. So I always like to kind of start there, with any kind of course that I do on options. And then part three, we'll get into, the synthetic covered call, smarter way to trade for certain situations. So then once you found the great setups, the trade structure becomes the real edge, right? So in the course, then we'll go through the synthetic covered call strategy that's going to allow you to participate in long-term trends using less capital. Huge benefit there. Replicate your stock ownership with options, capital efficiency. Generate potential income through selling calls against it. Get that call premium. Amortize down your long position by the call premium you bring in. I'll show you how to do that. Stay with winning trades longer without overexposing. So this is really going to get you more efficient in your capital, expenditures of your trades or your investments. I mean, these can be investments too, right? Then how to add your protective puts. So I'll show you how to do that to enhance your management of these trades. And then we're going to go through some examples or anything that you want to, look at. So we'll go through, setup on Google, Amazon, Microsoft, or any other stock that maybe you would like to look at for a, long position using this kind of strategy. So it's going to be a lot of great stuff there. And then part three, why this strategy, really matters. So, when you get in uncertain markets, that flexibility and efficiency is going to be really important. So it's going to overall, again, just the big thing is going to help you to reduce your capital requirements on these trades or investments, maintain really good upside exposure, improve risk management the way we do it with the protective put, and then adapt to different conditions in the market and stay positioned. This is the big thing. You can stay positioned using this strategy. And then just, one last thing that we'll cover that, assignment risk, expiration risk, auto exercise, just so you know what to be aware of there. But so that's it. That's kind of a general overview of everything as far as the course. And then here's just one last look at the bonuses that you're going to get. Now, if you do it with option 2, you'll get the volatility scanner. So we'll go through how to set this up, and you'll get the volatility scanner that I use. And so then you can, scan NASDAQ 100, S&P 500, or anything on your watch list. And I've got this available for Thinkorswim and TradeStation. So this is a scanner that's based off the volatility squeeze, which is a consolidation pattern that has potential for big, fast breakouts, either up or down. So this will then, populate everything that's in a squeeze, and you can do it from any time frame, from 5-minute all the way up to weekly or monthly time frame. And then we'll go through the next scanner that I use a lot that we're going to cover is the momentum crossover indicator plus the scanner. So I'm going to give you and show you this indicator and how to use this. This is a really fantastic indicator that I use, and then how that works. So that'll be a big part of that. The trades that I use for these swing trades or even long-term trades. So you'll get this, and this is what I call my momentum reversal confirmation indicator. And so it's got an upper and lower study to it. So you'll get that if you do option 2. Just remember, 30 extra bucks. That's all you're looking at. And then I've got the this available for Thinkorswim. So it'll populate this. I'll show you how to set this up. Get these scans going for you each and every day. After the close, you can scan whatever time frame you're looking at for this as well. It could be 5-minute all the way up to monthly. So you can do any time frame on this scanner as well. You'll get that. And then you'll get my price target mapping if you do option 2. So this is my what I use for mapping out price targets up or down for profit take or even stop loss levels. And it's based on a combination using Fibonacci, moving averages, price action support, standard deviation, option activity. So it's a really great 3-hour course. This recorded with a 139-page training manual of the course. So this is what I use for every trade that we ever set up in the trade room or with the alert service. I use this kind of process. So this is the course on that. And then everybody though will get a 30-day trial membership. So if you do option 1 or 2, you'll get this. And then this gives you access to my trading room during the week, Wednesday through Friday, 9:30 to 10:30 Eastern. And then daily video newsletter updates every day after the close, weekly Q&A access during the week, every week for the next 30 days, and discounts, 50% off anything on my website, courses or software there. And always like to point this out. Jay, one of my old members, said reading books is fine, but seeing the actual option trade setup makes a huge difference. And that's so true. So that's what you're going to see there. And then you're going to get my new service that I'm just going to start here this month when I find a good one to send out. And this will be my synthetic covered call alerts. And so this will be, you'll have access to this as well if you do option 2. And that's for that extra 30 bucks. Everybody will get the live follow-up Q&A. So we'll do that the day after, or we'll do this on Tuesday, 28th. And then you'll get my option trading tutorial. So, these will synthetic options. You need to understand a few things about the option side of things. So this is my 60-page option guide with videos that's going to cover the Greeks, delta, gamma, theta, option pricing, standard deviation, things like that. Things that you need to know and understand for any of your option trading. So that's a general overview of that, everything that you're going to get. So again, please use that powercycletrading.com/synthetic special that I just gave you. That should still be up there. Here it is again if you need it, and then use that promo code SCAN15. Now, here are a few of the trades. Here's one that we just did on Google, which turned out unbelievable. And I'll show you that one next. Yeah, use small cap SCAN15, and that'll give you the discount 15 off. So here's one of my members, Waleed. This was a really nice thing. He said, Larry, I have to mention one thing. I'm subscribed to a lot of services who send out trade alerts. Some are good, others are not that great. But one thing I'd like people on this webinar to know is that when I get an alert from Larry, I do it blindly as time has shown me. This man is dead accurate in his recommendations. Great service, Waleed. And this was from Dan. It said, very diligent, thorough in your analysis for your trade. That's the foundation, the success of the alerts. And this is so true. A lot of members have done this. I paid for my subscription to the alert service with the first 4 trades that I did. when I was just learning how to trade options. Please feel free to share this with your members. So that's so true there. Now here is the alert service here. Let's go through a couple of trade setups here that we've done recently so you can get an idea. But when I do send these out, I'll always give you the suggested option trade to use, or you do your own thing. A lot of members just do their own thing. I'll give you the entry level profit targets that I'm looking for based on this Fibonacci price target mapping. I'll give you what option series to use, stop loss guidelines, and I monitor the trades all through the day, giving you updated alerts and things like that through Telegram. And then the trades are listed and archived. Again, I do a video review of the trade after the market close that day, so you understand why I was doing the trade. And then I do have the video newsletter, kind of give you a market overview each and every day after the close. Then we do live weekly Q&As every week during the week, and then the trading room is open Wednesday through Friday, 9:30 to 10:30 Eastern, and discounts 50% off on anything on my website. If you pull the website up and there's anything you want, you'll get a member's discount code, and then you just plug it in and you'll get anything on my website, courses or software. So if there's a course that you like, and pretty much everything I do is pretty much option related, tons of courses. All these courses are then 50% off for you as a member. Or if you want any of my software, 50% off. Here's my scanner that you're going to be getting for an extra 30 bucks. Here's my scanner that's going to be coming with package option 2. This is a $397, but if you do want the scanner, then just pay the extra 30 and you get all that. Your indicators, everything's 50% off. If you use it, you'll get a member's code for that. All right, so hope that was pretty clear. Now here's a kind of an overview of a few alerts that we've done here recently. These are butterfly condor alert, part of the service. And so this is the trade summary so far. Started this back in 2019 through Friday. We've had, these are just specifically butterflies or long condor alerts that are sent out. So done 250 trades closed out, 177 winners, 22 break even, 51 losers, win break even rate run at about 80%. And these are very low risk. Typical loss might on average be maybe $75 per option spread. Returns 2 to 1 to 25 to 1. Sometimes we did 1,200. We did 12 to 1 on the butterfly here on Google this past week. So here was the Google trade. This trade was pretty cool. This was the alert trade sent out that was sent out on the 9th of April. Google is trading at 315.90. So here it is. It says new Google long trading at 315.90. Daily cycle low, retracement reversal. I kind of give you a little bit of background on the setup. Positive momentum upside cross. That's the indicator that we're gonna go use in the course next week. I give you targets to the upside here. Initial 327, 330. So we set this trade up with a butterfly, and so set this up using the 320, 330, 340 $10 wide butterfly spread. I said do it at around $1.85. Now this thing then started moving up, and so I didn't put all the different adjustments because we did so many different things, but we made an adjustment on the 14th. It was trading at 332.60, so it was trading through the short strike here of the butterfly. So wanted to close that out, didn't want to get potential of in exercise. So what we did was we roll the whole spread up. So sold to close the 320, 330 part of the spread, and then bought to close the 340. So did some adjustments that are laid out real clear and to the alert members, and then took a big, huge profit from the spread that we were originally long, the 320, 330. So adjusted down our costs down to about 63, 65 bucks. And then here it was on Friday. This trade now was going out on Friday. It was trading at towards the end of the day, 341.20. We had adjusted the trade on the 14th into the new butterfly, rolling it up to the 330, 340, 350. And so it was almost very, very close to a pin at 340. So Going out, this was up $810 per butterfly spread. So if you did one butterfly spread at the end of the day, this was up $810. That was up over 1,200% return based on our adjusted cost. And I'll show you that in a second. So this is a really great setup to begin with. So we set the trade. Now the perfect setup is right here. See this? That's your reversal. That's what we're scanning for. That's the scanner. The scanner picked that up, but didn't take the trade. We had all that war stuff going on, and so. But then we had that big rip up here, pulls back, jumped into it right here on the 9th, right there. We still had good momentum, so jumped into the trade here. Was on the 4-hour, pulls back, almost filled that gap. I was hoping, what I was hoping for is would fill the gap, but it wasn't filling the gap, but it was right over that 50. So went ahead and jumped in it and did it with a butterfly because was worried that maybe with all the different headlines that it could come back. So wanted to keep the trade really low risk. So jumped in with the butterfly spread. That was the reason to do it. And then it made the adjustment on this day when it was breaking through that 330 strike. And then here it was, on Friday. So this was a really pretty quick in and out of trade. And so here's what the trade adjustment looked like after we did the adjustment, moving the spread up to the 333.40, $10 wide strike, adjusted down our cost to $63 per spread based on selling the original trade 323.30. We had a huge profit, locked in on that. So that's why we got the reduced risk from 185 down to 63, and then still maintain a $10 wide spread. So we had a huge potential profit for the trade. So $1,000 wide spread, 330, 340, 350. Cost of the trade, adjusted cost, $63. So potential, if it was to pin perfect, was $937 per spread, 1,487% potential return there. We came pretty close. We still had a great trade, great return. It was going out right here, but we had great profit all throughout the day. It was just a fantastic trade setup at the end of the day. So went from 63 adjusted debit cost here to that spread blew out to 873. So $810 per spread, 1,286% return based on that adjusted cost there. So that was a beautiful trade. Here was another one that we did. This was another kind of adjusted. This was one on a call calendar diagonal that we had originally set up on Apple, and then adjusted this into a long call condor for a really reduced price as well. So these are the kind of trades setups that you get and the adjustments you get if you do join the alert service. So here's just another quick. We'll go kind of run through this, but this was on Apple. It was trading at 263.40. So we originally set this up as a calendar diagonal right here without going through too much detail. And then we did some adjustments. And then on the 5th of February, had an adjustment that we did on this. And then here it was on the 11th. It was now trading. So originally we were 263.40, and now we're up to 278.75. And we adjusted the trade on the 5th into a long call condor. And so here it was going out on the 11th. We were now up from, this was up $910 per spread, and this was up over 1,200% return as well. So this was a long condor adjusted trade that we started with a calendar diagonal. And this was another reversal trade setup. Basically, we got in the day after. See the reversal bar here? So this was the scan right there. It picked it up, got in the next day, right there, right on the open. And then adjusted here, did another adjustment, and then out there. All right, so went from 263.40, did adjustment on the 3rd and the 5th, and then profit take on the 11th. It was trading out 278.99. All right, so adjusted this into the long call condor and adjusted our price down really nice to $75 from the adjustments that we did. So now we were long the 267F 280 call debit spread like that. 12, what was that? Yeah, $12.50 wide, and then short against it, additional credit spread here, 287,300. So 12.50 on the spread width, less our adjusted cost 75. Potential goes out in here to make 1,175 per spread. That'd be over 1,500% return. A nice, beautiful trade there, and went out pretty close to that right there. Went out trading here on the 11th, 278.99. So that spread blew from 75 adjusted cost here to 994, up $919, 1,225% return on that adjusted trade there. And then here are a couple of counter diagonals. We do a lot of these in the alert service. So we've done since the inception back in June of 2019 through Friday. Had 412 closed out, 292 winners, 31 break even, 89 losers, win break even rate 78% unaudited, kind of summary results. And then here are a couple of trades here that we've done. We had one, actually we currently have one on with Apple. I'll show you that in a minute. But here's one we had done on Slumberjay. It was trading at 50.40 and went out to 53.42. But anyway, this was a trade that we did with a long call counter diagonal. And then I'll just kind of go through here real quick. But we set this trade up right here, another reversal. See that? These are all the same pattern. These are all the same. All right, so there's right there. That's what you're gonna get. All right, so set this up the day after that. And then did this with the counter diagonal. All right, so the initial trade, we did the 10 April long, short the 27 March, 54, $4 wide spread at 205. And it was trading here on the 27th, set up on the 24th and 27th. Now this was up $151 per spread, 74% return there. And then here it was on the 27th, adjusted it on the 27th, and here it was going out on the 27th here. We just did that adjustment and then took it off. So now it was trading at 53.42. So now we had this trade, we adjusted the trade now from the 10 April 50 long to the 2, see we rolled to the 2 April 56, we widened out the spread $6 wide. Adjusted price of $1.79. Now it was trading at $3.80, so up $201, 112% return on that. All right, so that was look there. Here's one that we did on Palo Alto. I'll go through this kind of quick. This is one that was what I call an aggressive long, but this was one that we set up. Had a number of different adjustments. I won't go through all the different ones, but this is Telegram, so this is what you get. And then the initial trade setup again, we had a cycle reversal. This was we got into this based on a 4-hour time frame. So we got in the day before we had the reversal on the daily. So got in right there, nice trend up, and then that's where we got out. So we did the adjustment, got in the 4th, and then we did an adjustment on the 5th and out the 13th. So 157.5 to 169.88. And so the initial trade, original trade was this setup, the calendar diagonal, 13 March, 157.5, short 6 March, 165 at $380. That was then went to 691, up 311, 82% return. Then we did some adjustments and then ended up with this call Condor. Okay, so another adjustment into Condor that we do these a lot. And so it ended up then with the spread 160, 170, 175, 185 call Condor, reduced our risk all the way down to $65, $1,000 wide spread, potential to make 935, 1,400% return. And this one went out right there, pretty close. So this one ended up making 823 per spread, 1,266% return on this adjusted trade here. So went from 65 to 888. So nice, beautiful trade set up on that. So just a few ideas, give a look at a few things. Here's one that we did just to give you an idea of what we call the lotto trade. This is one that we did on a pinning trade on GLD. And so this is kind of a super low risk, kind of what I call a binary trade. Either you win or you lose, but we had a risk of 25 bucks. So this was a beautiful trade set out, and we got into it right here. It was trading at 387.90. We were looking for a potential move to 400 and got pretty close on this as far as the pinning trade setup. So set up this 396 400. We were looking for a 400 pin, 404. Got into this for 25 bucks. Potential profit $400 widespread 375. Potential 1,500% return if it pinned there, and we got really close. Went out trading at 399.74. So this was up. Went from 25 to 331. So it's up 306. 1,224% return. So that's hopefully what you can be looking forward to, and I think that pretty much covers everything. Let me make sure there's no additional questions. Yeah, so beyond the 30 days, I will be putting together pricing. It'll probably be I'm not sure exactly how I'm going to do it after that. It might be bundled with the other alerts that I do, or maybe kept separate, but it'll be probably, I'll do a longer term time frame. So initially, 147 around there, but I'll probably end up doing it for 3-4 months or something like that, and then I can give a lower price, something like that. Yeah, bundle. Yeah, that's what I'll be looking probably to do. The two types of scans where they can work. Well, I'm going to show you how to set the scans up. And Thinkorswim is the best place, but you can do it with the TradeStation and some of the other platforms as well. Yeah, how to do the Google for 2 years synthetic options. You can go out, pretty far out on your options series, option chains, and that's so went out 2 years out using the leap options. Yeah, here's the Apple trade if you want to see that. Here, let me pull that up real quick. Pull that up. We did this with a calendar diagonal on Friday. This thing really started to rip up. It had some good profit, pulls back, but it still looks pretty good. Let me show you the setup. So here's the Apple trade. And we did this Apple trade Friday. That's not the chart I wanted. Anyway, here's the, let me show you real quick. So we set this up. Friday, Apple had come back down to this area here, then was starting to move back up. So wanted to get into it right here, see the 618 retracement. That's what I was looking at. So we set this up and did this with a long call calendar diagonal. And the really cool thing with the some of the high liquidity stocks, Google, Apple, Amazon, they've got, we've got weekly options for Monday, Wednesday, and Friday expiration. So this was really nice because could keep it really short term. So went out and bought the 24 April. That's next Friday's expiration, 267.5. and then sold against it Monday, the 20 April 275. So nice, pretty wide spread. This got up to over $150 a spread on Friday, but so this has potential on Monday to be up over 390. But what we'll do is we'll take we were short the 275 strike. We'll keep the premium, adjust down the cost, and go from there. But that's, you know, a typical kind of trade you know to look at. Yeah, so the difference between a synthetic cover call and a cover call, the cover call is you're selling the calls against the stock that you own, okay, that you own the shares. And a synthetic is you're replicating owning the shares, but you're going to do it for a fraction of the cost by using a certain option spread setup to do it. The arrows are my indicators, that my custom indicators, that if you do, you know, want those, they're available to you. Okay. Well, the adjustments, you know, so if you could do your own thing, a lot of members, like I said, they just do their own type of, you know, if you want to go long, you know, if you do the alert service, you're doing it for the trades, right? You're doing it for the good trade setup. So however you trade, so do you buy shares? If you want to buy shares, you just buy the shares. Let's say on Apple, instead of buying that calendar diagonal, you just go buy calls. A lot of members would just buy calls, right? So you can do that. So, you know, and then you don't have to worry about doing the adjustments or anything like that. So you're just looking for the trade setup, right? And so this course will be teaching you the scans that I do to find these trade setups. And then when I send out the trades, then I, you know, match it with a, you know, option trade strategy. But you don't have to do that. You know, you can just, you know, if you feel more comfortable just buying the shares, you just buy the shares, or, you know, buy calls or buy puts if it's a short. So that's what a lot of members do as well. So it's, you know, that kind of basic, simple kind of setup. Yeah, so after 30 days, yeah, I'll probably, like I was mentioning earlier, I'll probably set it up to do a bundle. So make it probably 3, maybe 4 months, something like that, and I reduce the price down. I'll come out with that, but this is brand new, so don't have exact what to do yet. All right, so that's a look there. And again, use the powercycletrading.com/synthetic and use that scan. So with this course package option 2, if you do the alerts, then this will be 507 plus just $30. Just looking at $30, and you'll get all the alerts for the next 4 months, Trading Club for the next 4 months, plus you're going to get the new synthetic covered call alerts as a trial. And then I'm, you know, gonna, you know, do some different bundles and stuff like that. So you'll get that. You'll get all these additional tools: this volatility scanner, the momentum crossover indicator and scanner. I'm going to give you that. You'll get my Fibonacci price target mapping course, 30-day trial membership to Trade Club, the synthetic cover call alerts, access to that, trading tutorial and options, all that. And you're looking at 197. If you just want it, just the, you know, if you've already got everything and you don't want anything but mine because you already have the indicators and stuff, a lot of members do, then just use that option 1, and that's 167. And then if you want the alerts on top of this, then you've got the alerts for the next 4 months, all 5 alerts, plus you're going to get the synthetic, right? That's brand new if you do option 2. And then option 2, you get all the scanners, the bonuses, just for that extra $30, 537. If you just, you know, already have everything, you just want the course and a few of the extras that I've got, it's 507. There's a 2-pay if you want it. And that's it. Just powercycletrading.com/synthetic special, and then use that scan 15, and you're good to go. All right. Well, I'd like to say thanks so much, everybody, for spending some time with me today. And thanks, John. Appreciate it. You're quite welcome. All right, everybody. Have a great rest of your day. And I'll see a bunch of you back here next week. And thanks for being here. Good luck trading.